All right, what is the trade of the day? Today is October 19th. Right now is 11:15 a.m. PST. So just now we had this Biden press conference where Biden said that he wants the U.S. oils to increase the production. Let me just mute the television 1 second. Year highs. Our next guest says it's important to stay invested in equity in spite of the volatility. And so two things happened in that press conference. So the Biden says he is asking the companies to increase production. Second, he is going to fill up the Federal Reserve for the oil. And third thing, he said that he wants to appeal to the Congress to accelerate the clean energy red tape removal so that the production and everything can happen faster for the climate control. So what that means is that the solar stocks, which have been beaten down in the last couple of months, it has been like way up after the summer when the Biden administration announced this, the Inflation and Clean Energy Act. So then they went down as much as they went up in the last 1 month or so. So right now, Sunrun is at 20, Charge Point is at 12, which all were like $17, $35. Other way. So Sunrun was $35 and Charge Point was $17. There are multiple other stocks, the EV stocks, the plug, the hydroelectric, the car stock, all of them have been beaten down badly. So now there's an opportunity in those clean energy stocks because the market will speculate what the Congress will do for the next few months to pass this legislation. The problem is the midterm is nearby. With the midterm, if there is a split Congress, that means that nothing will get passed. So that's why the stocks are not reacting as much as it should. So the good thing is to sell a put and sell a call on this stock so that until the midterm, which is in November second week, we will not see the stocks move up or down one way or another because the market is in a gridlock. So that's a trading opportunity at this point. So we don't expect that each of these stocks will go up or go down further because nobody knows what's going to happen in the election. Nobody will going to take the risk. So that's one trade that's really coming imminent from this today's market, today's Biden administration's the press conference. Same thing goes with the energy. So you can sell XLE puts at 75, which is a very good support, and then sell call at 95, 1 month down the line, and I think you can get good premium. For the rest of the so right now looks like that 10-year again making a move towards upside 4.11. So it was like 3.95 yesterday. So the move is astonishing again. In the next, in 2 days, it's moving like 20 basis point, which is really volatile for the currency. So what we do, I mean, this is actually looking really good. That market did not sell off completely today. Nasdaq 2% down. I mean, that is, I guess, expected because the as a 10-year goes up, which is a growth indicator, you will see the Nasdaq stocks get beaten quite badly. That's what is happening, but not that badly today. I mean, the stocks are like $2-3 down, 2-3% is down. Most of the cases, right? I mean, not like, but what is getting beaten down today is some of the like NEO, the Chinese stocks, these are getting beaten down badly. And I do not know at this point why, but I think there is a news coming. And it could be the SEC news. It could be that something is leaking. And otherwise, it cannot be that 10% down, like 6-7% down for an ETF in a day. Yesterday, it was moving up. It was 22.5 K web. FXI was moving higher. It was trying to battle that bottom formation it formed like before the China election, and it was trying to come out of it. The stock was up about $1, which is about like 21 of a 5% up, close to in last couple of days. But today it's down more than that. Today is both FXI, K-Web really went down. NEO, which actually announced its earning, but it's actually it's pretty decent earning. The growth is pretty good, but still stock is down like $2 just one day, which is crazy. It's more than 15% down in a couple of sessions. So point is something is going on in China. So my portfolio has a lot of Chinese stocks like Neo as well as KWeb, which is like a Baba and all others. So they are all Baba, for example, is trading at 73. It cannot come out of this lows. So it was trading at 90 and then went to 100. And at the time, I got the positions. But since then, at the time, KWeb was looks like it was breaking out because there's a news of China reopening. But since then, I bought the K-Wave F30, uh, but uh, but right now it's at 21. It's been painful, but I think the more pain to come in the China stock. So uh, it's really too late to sell because any kind of good news can also come out at the end of the week from the Chinese premier, like she's the Politburo meeting that's going on this week in the China Congress. And out of that, there might be some volatility relief. But on the same hand, and the same side, we cannot really ignore the price action. The price action is so bad in the Chinese stock. Something is going to give. So watch out for the space. Maybe short the stock if it breaks K-Week, it breaks below 20.5. That's its 52-week low, and it actually touched around 20.9 today. This is not far away. Maybe Friday is some the capitulation day. uh, we'll see that, but this is the space I'm watching. But other than that, it looks like Apple is not behaving very well today. It's around 142. It cannot get out of this 145 zone. So there's some news that the demand destruction for the iPhone 14 Plus. There is some looking at the overall market. The Meta was trying to break through 136 but could not. Now it back to 132. Uh, Amazon was trying to break through the 117, but back again 113 after 10-year picked up. So watch out the 10-year space, US 10-year space. I mean, that is the key. The 2-year is at 4.6, 10-year is 4.1. I mean, these are like at the breakout level. So I know it seems like that we did a double top and break 10 years going to go down, but it again went up. So there's so much correlation of what is happening in the UK market. The stock was up because the 10-year was down until around 8 o'clock when the UK market would close at 8:30. And at the UK close, something happened, and that really spiked the 10-year bond up as well as 2-year along with it. And it's a play of the currency, it's a play of the how the pounds actually behaving. So the UK, everything is correlated so much. The UK gilt and the 10-year, how actually UK is buying the bonds. Maybe they're selling the US bond, keeping the bond price up, and with that money, they're buying, the US, the gilt. I don't know what's exactly happening. That's also increasing the gilt, the pound to dollar ratio as well in the last few days. And pound is really on a going higher for the last and then they reversed all this tax and other policies. That's also helping the US pound, sorry, the UK pound and the gilt. So all in all, this correlation is really hurting the US bond, I think. But there are other players as well. The Japan, who knows, the Japan is selling or the China is selling the US bonds. So altogether, it is going to be very volatile. So what it seemed like a couple of days ago that we are going to go 3900, but as I mentioned in the last video, that it can go either way. The 4-year is actually on a path to go to the the breaking to 4.5, and 2-year on the path to go 5.3%, which is like the top part of the channel. And if that happens, then we're screwed. We're going to 3200 probably very soon on the S&P. On the other hand, if we are seeing that the divergence that's forming on the 2-year chart as well as on the S&P that happened last week, the divergence of the RSI and the S&P trend line, that is kind of going in the opposite direction, RSI going up and the S&P trend line going down the last 4 weeks or so. If you have to trust that divergence, then we are supposed to see that the stock going up. But 10-year and 2-year on the key. if 10-year or 2-year, 10-year is doesn't have a divergence like 2-year, but 10-year is was hitting a ceiling of 4.1. Now it broke the ceiling. Now it is not very clear that what's going to happen, what's going to take the next move. So what's that square of 10-year and the 2-year? Very important that that will basically drive the stock market going forward. Hedge, hedge, hedge. That's the key word now.